Hello everyone, welcome to my channel. This is Easy Accounting channel. We are talking on TFSA, tax-free savings account, the obligations of the issuer of TFSA. They must exercise care, diligence, and skill of a reasonable, prudent person to minimize the possibility that a trust governed by the arrangement hold a non-qualified investment. So if the issuer fails to comply with this obligation, then the issuer is liable to a penalty under the Income Tax Act. And the issuer is also required to notify the holder of TFSA in prescribed form and manner before March of the calendar year. So tax payable on an advantage. So if the holder or a person not dealing at arm's length with the holder was provided with an advantage in relation to their TFSA during the year, 100% tax is payable, which is in case of a benefit. The fair market value of the benefit in the case of a loan or debt, and the amount of the loan and debt. So TFSA payment of taxes. So most TFSA holder have no tax payable related to their TFSA investment, and no TFSA tax return has to be filed. However, when TFSA taxes are applicable for a year, you have to fill form RC243 and must be filed by June 30 of the following year. So any amount owing must also be paid by that June 30. So if a TFSA return is required that has not been filed, we may use information provided by your issuer to calculate any tax payable to you. So excess TFSA amount correspondent explain. So CRA may send a letter or a proposal TFSA return to a TFSA account holder. So excess TFSA amount letter, if you receive the excess TFSA amount letter, you have already removed the excess TFSA amount. And the proposed TFSA return package normally include the cover letter and the form RC243 proposed TFSA return. Responding to the proposed return package. So this proposed return does not represent a formal assessment of tax, although you cannot file a notice of objection on the proposed TFSA return. So if you agree with information on the TFSA return, you sign and date and include your social insurance number. So waiver or cancellation of TFSA taxes. We may waive or cancel all or parts of the taxes if we determine it is fair to do so after reviewing all the factors. One, the tax arose because of reasonable error. The extent to which the transaction or series of transactions that gave rise to the tax also gave rise to another tax under the Income Tax Act, and the waiver is limited to tax paid under Section 9 of the Income Tax Act. So what should you do if you disagree with your assessment? If you disagree with the assessment or the assessment of your TFSA, contact CRA within 90 days of the date of the notice of assessment. And also you can check it on my account. Let's view your personal income tax and benefits information and manage your tax affairs online. And also you can use your my account or my CRA account to view your benefits and credits, or to view your notice of assessment, or to change your address, direct deposit information, your marital status, and information about your children. In addition, you may use my account to view and print your proof of income statement and submit document to CRA and submit an audited inquiry. Receiving your CRA mail online, you can sign up for your email notification to get most of your CRA mail, and you can make payment, electronic payment offered by CRA. Thank you for coming to my channel. I hope to see you in my next video. Please subscribe to my channel and share my video. Thank you. Bye.